Tonight I want to explain why the AI bulls could actually be right.
Nvidia shares have nearly tripled year to date, are up 50% in just the past month.
I realize Nvidia kind of told you when they blew those numbers and they gave the guide for the 2Q.
Nvidia going all in on AI today, announcing a partnership with Adobe.
Forget about $1 trillion. This is headed to $1.5 trillion, $2 trillion market cap. You hear that almost on a daily basis.
Nvidia and AI have been the talk of the market in 2023, but valuations have become seemingly unsustainable. Stick around to find out why I believe the AI bubble is about to pop. In late November of 2022, OpenAI made waves by launching ChatGPT, an AI chatbot powered by an extensive language model specially tailored for conversational applications. The world was quick to embrace it, making it the fastest growing consumer software application in history by January of 2023. ChatGPT has become the jack of all trades in the software world, aiding in everything from crafting complex lines of code to assisting high school students with their homework. The global frenzy surrounding AI's future potential has catapulted OpenAI to a stunning private valuation north of $29 billion. As we crossed into 2023, investors have started clamoring to align themselves with AI's promising future, hoping to ride the tide they expect will catapult the stock market back to record heights. However, a potent mix of broader macroeconomic factors looms large, casting shadows on these AI stocks. Let's peel back the layers and delve into why I think we're currently floating in an AI bubble, using historical market patterns and the wider economy as our guide. The meteoric rise of ChatGPT has ignited a competitive frenzy among tech companies to stay ahead in this rapidly evolving landscape. Titans like Google, Meta, and Baidu have kicked their large language model development into high gear, and Microsoft has invested in and partnered with OpenAI. But the honeymoon period seems to be ebbing away, with signs of fading demand for applications like ChatGPT among the general public. Will these applications stand the test of time? We will have to wait and see. Despite the widespread enthusiasm, ChatGPT has its flaws. A notable incident involved a lawyer preparing his cases using ChatGPT, which led him to base his argument on non-existent cases. While this may seem like a minor hiccup on the surface, it raises significant concerns when we contemplate integrating AI into more critical functions of our society. This is one of the many reasons people are calling for AI regulation worldwide. Recently, US lawmakers held hearings to examine AI's safety and its implications for our labor force. Regulatory risks to large language models are considerable, as lawmakers can stifle innovation and limit the industries where AI can be deployed. How they will react remains a wild card that could significantly stifle this technology's growth. AI demands an incredibly high level of GPU computation. OpenAI's infrastructure leans heavily on Nvidia GPUs, an endeavor that reportedly demanded hundreds of millions of dollars in investment. As a result, Nvidia's stock has skyrocketed in 2023. Despite their market-leading position, serious questions linger over Nvidia's ability to maintain their dominance and live up to their staggering $1 trillion valuation. Looking back, we draw parallels with the dot-com boom in the early 2000s. Back then, the hype surrounding the internet era mirrors what we're seeing today with AI, inflating the valuations of any company claiming a stake in the AI industry, regardless of their product's maturity. In March of 2000, Cisco's valuation soared to a record $500 billion, making it the most valuable company globally. However, when the bubble burst, hotshot companies like Amazon, Yahoo, and Cisco fell dramatically. It's a stark warning for those contemplating buying Nvidia stock at current levels. While their technology indeed leads the pack right now, the pace of adoption might be overestimated. Additionally, competitors like AMD, Intel, and Apple are eager to chip away at Nvidia's market dominance. Nvidia has shown fluctuating revenues year over year and has grappled with accurately predicting demand for their GPUs, as seen in the gaming and crypto markets. So why should we trust their forecasts for AI? And can we really bank on their current valuations, with a price-to-earnings ratio nearing 500? One of the striking aspects of this scenario is the historical comparison with Cisco during its peak valuation. Cisco was experiencing a 55% year-over-year revenue growth, while Nvidia, despite recent highs as the darling of the AI boom, has seen a 13% decrease in year-over-year revenues. The AI bubble brings to mind other recent asset bubbles, like SPACs and crypto. However, what's particularly worrisome is that the AI bubble is swelling amidst severe inflation and escalating interest rates. Despite reduced access to capital, we've seen an astonishing surge in AI-related tech stocks throughout 2023. Rising interest rates increase the cost of borrowing, making it more expensive for companies to finance their operations or expand their business. In the world of AI, where research and development costs are substantial, this could mean slowing growth and innovation, impacting these companies' earnings potential or ability to stave off competition. If inflation proves to be more sticky than previously thought, the Fed will keep rates elevated for even longer, and investors may require higher returns to compensate for the loss in purchasing power. This means that they might shift their investments from high-risk sectors like AI stocks, which are far more volatile and speculative, to safer, more predictable investments that can beat inflation, like bonds or stocks in more established sectors. This shift in investor sentiment can lead to a sell-off in AI stocks, potentially causing the bubble to burst. The Federal Reserve's decision to hold off a rate hike in June of 2023, coupled with the uncertainty around a potential rate hike in July, creates a precarious environment. Add in the conclusion of student loan forgiveness, and we could be staring down the perfect storm to unwind markets and pop the AI bubble. When that happens, I anticipate these valuations will plummet as swiftly as they soared, potentially setting the stage for an incredibly bearish end to 2023. Thanks for taking the time to listen. What do you think? Are we in the midst of an AI bubble? Whether you agree or disagree, I'd love to hear your thoughts in the comments below. If you enjoyed this video, please show your support by hitting that like button and taking the time to subscribe. Have a great rest of your day.